Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner's out this week. We begin in Japan, where the ruling Liberal Democratic Party sealed a new coalition deal that sets up Sanae Takaichi to become the country's first female prime minister. The LDP and Japan Innovation Party agreed on a range of policy initiatives across the economy, national security, and energy. Both parties are also aiming to cut the number of lawmakers' seats in a parliamentary session and reforming Japan's social welfare system. We get perspective from Sheila Smith, Council on Foreign Relations Senior Fellow for Asia-Pacific Studies. She spoke to Bloomberg Shery and Avril on the Asia trade.
I do wonder how long we're expecting this cooperation and collaboration between Ishin and the LDP to last.
Well, thank you, Shery. Thank you for having me. It's fun to be with you always. I don't know, and that's the difficult thing as a Japan politics expert to say at the moment. Japan is really pretty stable in its politics. We don't often have moments of unpredictability, but I'll say the last 3 weeks has been quite exciting for those of us who watch. Takaichi Sanae is going to be the first female prime minister of Japan, as we anticipate tomorrow. Her coalition partner, the Ishin no Kai, or the Innovation Party, as you introduced them, are an Osaka-based or a Kansai-based reformist-oriented party, but share a lot of the LDP's views on defense, on security, on foreign policy. Where they differ a little bit, and to answer your question about how long this coalition will last, is really on the economic picture that they want to see for Japan. So it'll be difficult, I think. I think she'll get her vote as prime minister, but managing this coalition and this new coalition partner will be a little bit tricky.
What are some of those economic measures that they differ on, and what does that mean for major government policy measures coming forward?
Well, I think they've basically decided that they want to address the Japanese voters' concerns about inflation. So in short-term measures, things like reducing the gasoline tax, reducing some of the burden on households that are struggling with subsidies from the national government. These are all things that in the short run will be easy to do. What will be difficult is trying to find common ground on their policies to address inflation writ large. That is not an area that you saw explored in the coalition document that was announced today in Tokyo. But I think you're going to watch them walking forward gently together to figure out whether or not they really do share some longer term economic outlook, sort of targets for economic priorities. Takaichi is what's referred to as a fiscal dove. She's very much in the line of former Prime Minister Abe Shinzo. She wants structural reforms, but she really also appreciates the idea that the Japanese government can continue to help boost the economy. So expect her to not be very sharp in the way she addresses government debt. I think she's going to have to think about the long-term access to resources that any kind of real serious structural reform will need. And again, Ishin, the Innovation Party, wants social security reform. They want other kinds of reform, power sharing a little bit on economic development between Osaka and Tokyo. These are large structural reforms. And I think for the moment, they're very much focused on the short run. The next government budget will be a real telltale sign about how this coalition is going to work.
And also on reform, it's about what the LDP might be pushing for, political funding reform. What is your sense of the extent in which Ishin might be able to exert some influence in this arena?
It's a great question. The LDP has lost voters in both the lower house and the upper house elections over the last year, largely because of this question of transparency over money in politics and the resistance or the perception of resistance by the LDP to true transparency. All of the opposition parties, including the Innovation Party, have asked for an end to organizations and corporations giving undisclosed amounts of money to political parties. And transparency is key here. The political party that left the coalition with the LDP, the long-standing junior partner of the LDP, the Komeito, really wanted this kind of transparency in the relationship between politics and money. And Takaichi said no. And that was the issue that broke the coalition, the 26-year coalition between the LDP and Komeito. Ishin also wanted transparency, especially for those corporate donations, but she didn't offer it, and it wasn't in the document. So they have backed away from pushing hard on that piece of their agenda.
What about defense priorities on the two sides? How aligned are they?
Well, the interesting thing about the document that you saw that came out on Monday, Tokyo time, was that they acknowledged the need to defend the Japanese people, that they noted that they were both forward-leaning in a sense on reforming Japanese security policy, thinking about a stronger Japanese role in its defenses, along with a strong U.S.-Japan alliance. So I think on the defense and security side, especially the U.S.-Japan alliance side, you'll find that Ishin and LDP don't have a lot of differences among them. What's harder to know about the Innovation Party is they've never actually held power. So once they get into power and have to deal with the details, you might see some differences emerge.
Which will really play well with President Trump, right? We are expecting that meeting now with potentially Takaichi next week. Just quickly, how good do you expect the rapport to be between the two? Because that's so important for President Trump.
It is indeed. And so you saw the president on Truth Social when he thought that the LDP leader had been elected and would become the next prime minister. You saw a very positive tweet by the president. I think the visit by President Trump, which hasn't been announced yet by the White House, but is expected soon, to Tokyo on his way to Seoul in the APEC meeting, I think you'll see there the Japanese government will be rolling out the red carpet to demonstrate the strength of the alliance and the partnership. It'll be a very comfortable place for Takaichi Sanae as prime minister to introduce herself to President Trump.
That was Sheila Smith, Council on Foreign Relations Senior Fellow for Asia-Pacific Studies, speaking to Bloomberg Shery and Avril on the Asia trade. Coming up next, we'll hear from Carol Schleif of BMO Private Wealth for Check of the Markets. Welcome back to the Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner is off this week. In the States, Wall Street traders drove stocks higher amid solid signals from corporate America and hopes that tensions between the U.S. and China are cooling. With the earnings season well underway, about 85% of the companies in the S&P 500 reporting results so far have beaten profit estimates. That's helped fuel a rebound in equities, with the benchmark notching its best two-day gain since June. For more on the markets, we hear from Carol Schleif, Chief Market Strategist of BMO Private Wealth. She spoke to Bloomberg Shery and Avril on the Asia trade.
Well, I think trade deal is part of it, but also earnings are part of it too, because markets have been trying for months to move beyond the trade war, and we saw it pulled right back up to the front burner a week ago Friday with the back and forth between President Trump and President Xi over the weekend about, a variety of things, the rare earths and then the U.S. and the tit for tat that went on. But that's a piece of it, and pushing that back off the front burner and assuming that the two are going to meet and they're going to have discussions, and that it isn't something that's going to be settled quickly. Obviously, there's a lot to negotiate here, but I think it allows the markets to turn their attention back towards earnings. And we've got a big earnings week this week with something like 20% of the S&P that reports this week.
And do you see, in terms of earnings, big tech as the next key test for stocks?
Yeah, it definitely will be a test for stocks, because if you get any sort of hint that something's awry among where all the most significant leadership and optimism has been, you could see a temporary sort of collective inhale of breath from investors. But I think it's important to remember, though, that the underlying economy is still solid, even though we're shut down and don't have good, firm economic stats on it. We've got lots of tangential evidence. You'll hear it from the companies. There'll be a lot of parsing of not only the earnings themselves, but more specifically the backlogs, the spending, the employment levels, the CapEx plans. There's a lot going on that's actually pretty positive, and we think you'll see that pulled through the earnings season pretty consistently.
Which is why you understand that those risk assets are gaining ground. But what's happening with havens as well? Because as this chart shows, we're seeing an everything rally with gold reaching record highs, treasuries also continuing to gain ground.
That's exactly right. I think it's the way investors are doing a barbell sort of strategy that I don't want to get off the growth train yet, but I'm a little bit nervous at the edges. It's one of the reasons why you've seen some almost hyper activity, if you will, in terms of it was a mere tweet that went out, or a social post that went out on that late Friday afternoon, and markets reacted really instantly and really aggressively. And so, I think gold, bonds, traditional, even the dollar's behaving better. And so you're seeing people trying to pull some assets out there. But there are other places, even in the stock market, to hedge that aren't the Magnificent Seven. There's lots of other industry groups and portions of the global equity trade to participate in as well. So having that diversified portfolio should help guide through some of this if we do get interim volatility.
Does a delayed release of the September CPI data pose risks for markets if we're at these levels?
It possibly. I mean, the whole reason the CPI is out there is because the fiscal year end was there, and that CPI undergirds things like Social Security cost of living increases, 401k, gifting increases. There's a lot of stuff that's tied to that annual number. And so while investors will take it in, they normally would take it in along with the CPI or the PPI and the PCE and lots of other things out there. So it's one data point. And I think the more critical thing for an intermediate or longer term will be the longer we are shut down, the more likely it becomes that some of the data we'll never get because of it being survey data and things like that. So we need to get the government reopened and the statistics mills generating again for the longer term. But in the meantime, there's a lot of other sources for people to look to, not the least of which is earnings and company managements and the Fed's beige book and things like that.
Even as we look to the potential end of the shutdown in terms of U.S. politics and the impact on markets, is also that gearing up for the midterms. What are you seeing in terms of how markets will likely shape up in the year ahead?
I think the interesting thing is that with the midterms coming, and clearly the administration is very focused on wanting to watch those midterms and be supportive, if you will. And that's where, with a lot of the trade policies and the immigration policies, a lot of the things that were potentially disruptive of markets got done early in the term. And now the focus really is on how do we sustain growth? How do we reduce regulation? How do we get markets boosted again? And honestly, one of the other side effects that you've had of a government shutdown has been in the IPOs that were queuing up. If they weren't approved, they're not out. And so you've got to back up in some really high quality IPOs set to come as well, and that's supportive of markets. And so you've got an administration that'll be very focused on doing everything they can to support that economy and to keep the growth going into the midterms.
That was Carol Schleif, Chief Market Strategist of BMO Private Wealth, speaking to Bloomberg Shery and Avril Hong on the Asia trade.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.